properly document. The authorities tomorrow decide to audit your ES file, you will be required to produce all these documents. For instance, the board meetings, minutes, even the CVs of directors. They can ask to ensure that it's not some dummy directors who are operating here. They need to know that the directors who are operating the company have necessary qualification and skill to run the business. And third test is the adequacy test, which means that you have adequate employees who are sufficiently qualified, you have operating expenses, assets, and office to run the business. Now, adequate is a very relevant term. It depends upon the size and scale of business. So, there is no one size fits all approach that can be followed here. For a small consultancy business, probably a few employees would be sufficient. For an IP business, you need more highly qualified employees, engineers who are well versed in the concept of IP, and probably a few lawyers also to safeguard your IPs. For a back office or a support services business, you may not need very highly qualified people. A support service business can be run by not so highly qualified people also. Number of people also is relevant, that if it's a large, the scale of business is large, then probably you need more employees. If it's a small business, the revenue is not very high, maybe a few employees are sufficient. Similarly, assets. For a consultancy business, your people are the assets. You don't need a big setup. But at the same time, for some other business, maybe assets are required. Maybe a large office is required. In some businesses, a large office is not required. So it all depends upon the scale and size of business to prove whether the resources you have are adequate or not. So these are the types of tests which are seen by the FDA to assess whether the economic substance in terms of directing the business being directed and managed in the UAE is met or not. So the board of directors should physically meet and do the meetings in the UAE, because the FDA can ask for the visa copies, the air tickets if the directors are non-resident, the hotel bookings. So all this needs to be substantiated. Quorum of directors must be present, which means that if there are 6 directors and the internal regulations and company law requires at least 50% attendance, those 50% directors were indeed present for the meeting. The decisions which were done, which were made in the board of directors meeting, were properly documented by way of minutes, by way of resolutions. And the directors which have done the meetings, who are acting as directors, have necessary skill and qualifications to act as directors of that kind of business. Even if there is no board of directors, but there is a country manager or general manager who is responsible for the overall operations, then all these tests will apply to that person or those persons who may not be designated as directors, but they are responsible for taking strategic decisions of the company. These tests will apply to those people then. These are the activities, as I explained, that which are essential for generating the revenue. These are the activities which result in the revenue. So this is what the SIGA test is all about. Now, for instance, for a distribution business, so SIGA tests are nothing but a very common sense approach. For a distribution business, what could be the core income generating activity? One would be you're managing inventory, you have a warehouse, or you are using a third party warehouse. You have a mechanism to process the purchase order. You have a process to manage your sales order. You're ensuring your stock. All these activities will be considered as core income generating activities in the case of distribution business. Service center, again, the people who are actually rendering the services should be here in the UAE. They should be, you should be able to substantiate the services happen whether through emails or through some kind of agreements with the service recipient. And those people who are performing the services were performing it in the UAE, which will you can substantiate by way of their attendance record, their biometric records. All these activities should have some basis. For holding companies which basically have no other business than holding on to the investments and recovering dividend on the investments, then there are reduced compliance requirements, which means that they should be compliant with the local law and they should have few employees who are managing their investments and they have an office to sit. There is no requirement of direction and management or board of directors meeting at a regular basis, because this kind of business does not really require that much activity. So there are reduced requirements for holding company business. Similarly, for headquarter business, because they take policy level decisions, so those policy level decisions are being made by the senior management people here in the UAE. All this should be documented. There should be evidence to substantiate that senior management people are there present in the UAE, their CVs, their attendance records, the way they have decided something should be there to evidence that. Adequacy test, I explained that depends upon the level of activities, the complexity of activities, the scale of business, so it is relative to those things. So notification, again, the notification is the first compliance, needs to be done on the portal of the MOF, which is dedicated to the ESR compliances. You should, since the deadline for economic substance notification filing is approaching on 30th of June for businesses who are following calendar year, you must log in and check whether your passwords and all are working, because many times what happens is that the FTA requires, or the free zone authority, if you are located in a free zone, they require that you should reset your password every time. So rather than waiting for the last moment, you should well in advance check whether your login details, login IDs are working or not. Because at last minute, making these changes could be very painful, given that there is straight away 20,000 dirhams penalty. So notification is filed electronically. You have login ID, login there. It's a simple filing. Only some basic details are required. Most importantly, you should be able to assess what is the relevant activity you are carrying on. Once you have decided on the relevant activity, then the next step is to file this economic substance notification, because you should be required to select which activity you did during the last financial year. Report, as I explained, it's a more detailed format where numerical details are filled. If you are undertaking more than one activity, in respect of each activity, you will be required to disclose your revenue from that activity, operating expenses incurred on that activity, how many employees were engaged in performing that activity. All these details will be required in that economic substance report form, which is the second filing, which happens if you have earned any income from the relevant activity. That falls due 12 months after the closure of your financial year. So what one should do now? You should assess, first of all, if you have assessed already in some earlier years, you should assess it every year, because it depends upon the nature of business activity you have undertaken during the immediately preceding year. So every year is a different year. For example, you are not falling within the scope of economic substance regulations because you did not undertake any of the relevant activities. That's the assessment you did 3 years back. Now today, or in the last year which just concluded, you had lent some money to a group company for a very nominal interest. While you may not be really mindful of that, because that's not your regular business, it's just a one-off transaction. But if you look at the financial statements, it will show there that there is a loan given, there is an interest income, and that will take you within the scope of economic substance regulations. So every year one should evaluate. If you have evaluated, good. If you have not evaluated, you should evaluate every year. Especially for businesses who have set up their business only last year, that's the first year that you must to evaluate whether you are falling within any of the relevant activities. And yes, if you have been doing it good, you have been filing the economic substance notification report, that's fine, but revisit all your business transactions, related party transactions, income streams to check whether you are getting covered in any of the relevant activities or not. And there could be more than one activities applicable to any business. For example, we have seen that companies, primarily a service company, it is rendering services to its group company, so it is purely a service center business, but it has also provided a loan. So there are two activities which get triggered. Why I am saying this is because both these activities will be separately required to be disclosed in the economic substance report. And it may so happen that last year you were covered within the economic substance regulations, but this year you are not covered. So you may not be required to undertake this filing. So it's a year-on-year exercise. In case of non-compliances, there are penal consequences which we discussed in the beginning, so I will not repeat them. There is an appeal mechanism also provided, but that mechanism can be availed only if there is really an error on the part of the system. That's what we have assessed. If you have actually delayed in filing, so what are you going to appeal? It will be automatic 20,000 dirhams penalty. Either you pay it or you will not be able to undertake your subsequent filings also. A very interesting case, I would just like to briefly talk about that. In one of the cases which we dealt with, there was a non-filing of economic substance economic substance notification, and the reason was that the client assessed itself that it has not undertaken any of the activities. But a closer look at the financial statements revealed that the company had taken a loan from a bank. So taking a loan is okay. There is no doesn't trigger economic substance requirements. So it took the loan, it passed on the loan to a subsidiary. It recovered the interest, paid the same interest to bank. Net interest income zero, because whatever it recovered, it paid it off to the bank. Loan principal it recovered, it paid it off to the bank. So if we look at the financial statements, the net interest income is zero. So they concluded on their own that it's not we did not trigger the economic substance reporting. But we pointed out to them that even if you are recovering interest and then passing it on, you have still first recovered interest, which means that you have given the funds, you have recovered interest. Passing on to the interest to the bank is just utilization of your interest income. So economic substance regulations do apply because you have engaged in finance. Finance purely says that you have given funds, you have earned interest. Whether you have kept that interest to yourself or passed it on to the third person, it doesn't matter. But they wanted to file an appeal. So we filed an appeal and we told them that see, there is a delay on your part. Eventually they filed the notification. The moment you file the delayed notification, there is an automatic 20,000 penalty. So it's not that it will be coming separately to you in the email box. No, it automatically gets onto the ES portal. You will get a notification immediately. It's a auto-generated mail. So that's what happened. We filed an appeal. We took a plea that this is the case. Actually, there is a zero interest income, but the appeal was rejected because eventually you have earned interest. Whether you have kept it to yourself or passed it on to the bank, it doesn't matter. And we had warned the client that this will not work because there is a record of your part. So there are only three types of scenarios which are provided for which you can file the appeal. One is that you did not commit the violation. When can this happen? This can only happen that indeed you filed the notification or the report in time, but for some system generated issue, for some error on the part of system, it does not get recorded or it does not reflect and the penalty gets triggered. Then you have at least an argument to build that I filed on time, it's just a system generated issue because of which it did not reflect. That is one ground. Penalty is not proportionate to the violation. For instance, you filed the notification late, but the penalty limit was 50,000, which is again an error. You can appeal that and this will be rectified. But if you filed report belatedly, there is a 50,000 dirham. So it's not something which is disproportionate. That is the penalty prescribed and that is what you will have to pay. And the third one is also similar, the penalty imposed exceeds the prescribed limit. We haven't seen that any penalty which has been levied by the FTA is more than what is prescribed in the law. So how to mitigate the penalties? If you have for any reason had a delayed filing or an incorrect filing you did last year, for which a 50,000 penalty was imposed, then you must be very careful and assess what went actually wrong, why it was an incorrect filing, because the subsequent non-compliance can entail a penalty of 400,000. Audit readiness. Once you file the economic substance report, the FTA can pick up your report for audit purposes, which is basically to ensure that whatever you have disclosed in the report is correct and properly backed up by documentary evidence. And they do it by way of issuing a notice which has 40-50 questions. They allow you a good time of 5-6 days to respond to it. You can apply for an extension also, because answering those questions in 5 days is next to impossible. So you can apply for an extension. They give you an extension, but not more than 7-8 days. So the point I'm trying to make is that rather than collecting the documents later on when the audit begins, you should be ready and everything should be in file, so that if the notice is issued, you have sufficient material in place to provide to the authority. And these audits can begin up to a period of 6 years, which means that if you have undertaken the filing for 2020, it can up to 2026, December 26, the authority has a time to audit you. So these are the types of questions we have seen practically. Documentation in form of board minutes, attendance records of employees, CVs of employees, appointment letter of employees, to see that actually you have employees who are working for you. Biometric records, whether they indeed attended office, they are present in the office to undertake those activities. Floor plans of office, whether the area which you are occupying is sufficient for your level and scale of business. So it's a very detailed questions. It has number of factual questions, all factual questions. So you need to substantiate whatever you have disclosed in the report is backed up by something. With this, we reach the end of this presentation. We'll be happy to take any questions that you might have. I could not hear the question completely.
You can hear me now? So what I was asking, like, there are some companies that they do some of these services, but also they do consultation and technology. Are they also enrolled within these certifications that you have mentioned?
So it depends who is the recipient of their services. If they are
The headquarters is here, but they deal with vendors from outside UAE.
So if outside UAE, whether they are dealing with providing their services to group companies or not, that will determine whether they are covered in the regulations or not. If they are providing their services purely to third parties, which are not related to them, then it is not covered. If they are providing their services to their group companies, then they are covered.
And to individuals, not to companies as well.
Sorry?
To individuals.
If individuals know, then they will not be covered.
Okay. So no need to submit all this stuff.
No. Purely on basis of this fact, no.
Yes, sir. I have a question. We have a company based in Canada, and we have a local company here, 100% ownership is local, and we are funding that company.
You are?
We are funding that company to make a factory there, make a production unit there.
Where?
In Canada.
Canada.
Yes.
Okay.
So we are charging them any interest. We just keep giving them money. And we're making like a working capital. So what would be the scenario in that case? First thing, we are not charging them any interest because that we have a partnership there.
So if you have lent money but you are not charged any interest,
Yes.
so you will not be covered in the finance business, right? But just to add on,
Yes.
since corporate tax is also coming into force, and dealing with your related party, the group company, on an interest-free basis may not fly from a transfer pricing perspective. Transfer pricing requires that all your related party transactions should happen at an arm's length price, which means roughly market value.
Money.
If you had to lend money to a third party, you would not have given it interest free, right?
Yes.
Same way, once the corporate tax is implemented, it's applicable to you, you will have to charge interest at the market rate.
Okay, then it's a concern.
Then it will become compulsory for you.
Include it's not.
Another important point which I think I should have mentioned. Yeah, please.
So my question, so whatever we have done, for example, last 3 years, whatever the money we give to them, it can be an interest free, and whatever money I'll give in the future, it could be a interest I have to combine with them.
No, the moment the corporate tax law applies to you, I am assuming it applies from 1st of January to you.
Yes.
So January onwards, you will have to charge interest from your related party.
Even the previous month which we give.
No, not previous, from that year.
From that.
Yes.
Thank you very much.
Yes, please.
Like you said that the recipe must be a group of companies, right? So could you please define the word group of companies? What is exactly?
So I mentioned group companies. So for instance, there is a large multinational group. One company is based here in the UAE, which is providing services. It provides services to its group company, which is based in, say, Greece. Group company means that the financial statements of both the companies are getting consolidated for accounting reporting purposes, for reporting IFRS purposes. Which means at some level, at a head office level, the numbers, the financial numbers of the UAE company and the service recipient are getting clubbed, getting merged at a global level. That is what the group company means. So you will have to check it whether your financial statements ultimately get merged, consolidated with the recipient group company or not.
Okay, I didn't really understand. Like my financial statement for that customer? You mean the customer statement?
No customers. Yeah, so if the customer of your service is a group company means that same person is holding your share capital as well as the share capital of the service recipient. In very simple terms, it becomes a group company. So there is a head office in the UK, right, which is holding 100% share capital of the UAE company. The same head office is holding 100% share capital of the Greek company to whom you are providing services. Right? So there are three companies, UK, Greece and UAE. And UAE company is providing services to the Greece company. So here, this will be qualified as a foreign group company because in accounting terms, the financial statements you prepare for UAE, the financial statements for Greece company and the UK company will ultimately consolidated by the UK company.
How I know that my client is a group company?
No, first of all, your client is related to your company or not, you will have to find out.
I didn't really understand.
We can discuss it offline,
Okay.
in the interest of time. I got your question, I just need to elaborate it in more detail.
Sorry, just continuing on the discussion. So if I'm providing the services for a client, a third party client, I'm not part of this group of
No.
company, or they're not part of whatever business I do,
You're completely independent, right?
Yes, okay. I guess that's the question.
Yeah.
I have another question. If based on what you provided today, I understand that I'm excluded, I'm exempted from the ASR, do we still have to submit the notification?
No, you don't need to.
Thank you.
Yes, please. In one of the slides that you showed, you mentioned the entity is not covered under ESR. You said that entity is wholly owned by the UAE residents,
Yes.
which are not part of the multinational groups and are carrying out business activities exclusively in the UAE. What if they are providing consulting services to entities outside the UAE?
That's fine because your activities are restricted here. The recipient of service may be located outside of UAE, but the performance of service is happening within the UAE.
Okay.
That should be understood.
In that case, you don't even need to.
You just need to check whether you have any branch or a sister company in another country. If answer is no, next thing you need to check who are the owners of your company. If they are UAE residents,
Yes.
it's fine, you are not covered.
You don't even need to submit.
You don't even need to submit the notification. An exempt person is only required to submit the notification if it is a branch of a foreign company. If you are a branch of a foreign company undertaking any of the relevant activities which we discussed, you need to file the notification along with the evidence that your income is getting taxed at the head office level. For instance, a tax residency certificate or the income tax return or corporate tax return of the parent company.
One more question. We have another company. The parent company holds 50% of our business. They are based in UK.
Okay?
And we purchase from them because they have a brand, they own the brand, so we buy from them and we sell it here.
You purchase what?
Material.
Goods.
Yeah.
Goods. And this is, you sell it, not consume or manufacture.
No, we sell it. We sell it in UAE, we sell it in the Middle East, and Africa.
So this is likely to get covered in the distribution business, which is purchasing from a foreign good company. The only thing you need to check is whether your books and the seller's book are getting consolidated or not.
If it is
Your auditors will be able to tell you that. If they are getting consolidated, then you are covered in the distribution business. If they are not getting consolidated, you are not covered.
Oh, yes. Thank you very much.
I have a question here. In our case, we are purchasing from a company located in India. Okay, and majority of the purchases are from that company. They are holding shareholding of 16%, 1/6 on in our company. So will they be liable? I mean, we will able to file the notification and report, or what exactly?
Again, the test is you see and check with your auditors whether the books of accounts, the financial statements of the India company are getting consolidated.
No, they are not getting consolidated.
Even at the head office level,
No, they are not getting consolidated.
then you will not be required.
So in the notification, we will file nil, or how it would be?
You will not be required to file notification.
Neither notification nor report.
Report anyways is required.
Only when we file the notification.
You are filing the notification because you are doing a relevant activity.
Yeah.
Plus you are earning an income also from the relevant activity. Then only report requirement is there.
One more thing about this report, I mean, the economic substance would be, I mean, we can correlate with the corporate tax. So in case I am filing notification not applicable, so the corporate tax would be applicable to the free zone, or it would have a different criteria altogether.
So I'm glad you asked that question because there is a correlation of economic substance regulations with the corporate tax, although they are two separate standalone laws. So filing or non-filing of economic substance or applicability or non-applicability is not at all important for applicability of corporate tax. So entities that are located in free zones have a different corporate tax regime. It's not that by being in the free zone you are exempt from corporate tax. Corporate tax will be applicable to you, but there are certain incomes which can qualify for a 0% corporate tax rate. any free zone company, it will be required to register itself for corporate tax purposes as well as undertake the tax return filing. The only thing which needs to be decided is whether you qualify for 0% tax benefit or not. One of the tests for qualifying for 0% is that you are maintaining adequate substance in the free zone. That's where the corporate tax gets connected with the economic substance regulations, because the requirement of substance for 0% tax rate can be met if you are meeting the substance under ESR regulations, because the tests are same. Rather, in the corporate tax law, there is one test which is less than the ESR. If you are meeting the test as per ESR regulations, you will automatically meet it for corporate tax purposes.
One more thing I need to ask, for example, whether we have to go for a transfer pricing in our case we are purchasing from the vendor which is located outside the UAE. So whether for the corporate tax applicable from 1st of Jan 2024. So are we needed to do the TB study on the opening financial statements for 2024 or no?
So it depends whether that person with whom you are undertaking the transaction is a related party or not. If it's a related party, then you will require to meet the transfer pricing arm's length criteria, otherwise not.
So in the audit report it is mentioned as a related party, so we have to go for.
So there is a different definition of related parties provided in the corporate tax law,
Okay.
and it's quite an elaborate description.
I mean, just mentioning in the audit report does not suffice. We need to go for TB study.
There is an additional requirement. You will have to maintain a list of all the related party transactions. You will have to support the prices you are charging from or to the related parties are backed up with an evidence that this is the correct arm's length price, which is called a transfer pricing study or a local filing. Thank you.
I have a question. I'm working in a company that is only with 3 employees and is trade license for medical equipment. Should we submit a report under ACR also? We are
what
a
exactly?
distribution office. And the representative office for the suppliers outside the country, like UK, USA.
So you purchase goods or not?
No, we are not purchasing.
You are only a rep office.
Yes.
So rep office will not be required, but you are billing your group company for services you are rendering or not?
We are just like coordinating. And we are, for example, the customers are paying to our bank accounts, and then we are paying to our suppliers, but the billing and everything is to the customer company, not to us.
Do you record purchases in your books of accounts? Purchase of medical equipment, do you record or not?
Yes.
You record, and where are you purchasing from? Are they your group companies?
No, we are not group. They are not group companies.
If they are third party, unrelated companies, then you will not fall in the ESR.
Okay.
Yeah?
And one more question regarding the corporate tax for us that we are in the free zone. Where is the deadline? There is no still announcement, right, for the deadline for us to be registered under Emara tax portal.
No, so deadline has not been prescribed. You can register later on also.
Okay. Thank you.
Hi, thanks. If your company conducts multiple relevant activities, then does the notification requirements and reporting become more onerous, or is it just a matter of a tick box exercise when submitting?
Which business is that?
So it would be a financial tech company conducting some businesses in maritime, but also offering services as well. I'm more concerned about the services.
So if I assume, though I need to look into my related details, but let's assume it's a service company. It's earning service income from its group companies. So the notification required, as far as notification form is concerned, That is simple, it's tick the box because you just have to tick which activity you are undertaking. Besides giving out some basic details like address, name, VAT registration number, who is the responsible person here in the UAE, that is simplified, but the report is a difficult part. I would not say difficult, it's a more elaborate part because you have to disclose your numbers, your asset details, your board of directors meetings, dates, your number of employees who have worked on that activity, how many hours during the year they have worked. So that is a little detailed part of it.
So I wanted to check this, our company is a consultant company. So we render services to the insurance company. So would we need to file up the ES?
So I am assuming that insurance companies would not be your related companies. If they are, then you are required to file. If they are not, then not. But where are your clients based? In the UAE or outside?
Some are based in UAE, some are based in Saudi as well. Like outside.
So the important part is the services being provided to clients which are based outside of UAE. The second thing is that whether those clients are somewhere related to your company or not. If they are not related, then you are not covered with ESR.
Thank you.
Hi, I have two questions. The first question, who should submit this notification, which company? Because my understanding is everyone has to submit it whether or not you conduct one of these activities. And the other question is, if you start a company in KSA as an investor, but they still operate as two different companies, does that consider like a headquarter and a branch in KSA?
I got your first question. Can you repeat your second question?
The first question, who should really get this notification?
Yeah. So the first question, answer to your first question is that first of all, you have to assess whether you are covered or not in the ES regulations, which is based on a study of your financial statements, right? If you are covered, then you can on your own also submit this notification by logging into the portal of the ESR, or you can take a help of a professional services firms like ourselves to help you out with these notifications and reports.
Okay. And the second one?
Second one I could not get. Can you repeat it?
So the second one, if you start a company in KSA as an investor,
Yeah.
and the two companies will be operating as a standalone, two separate books. Does that consider as a headquarter and a branch?
So the UAE company is a standalone company, and there is a company that is in KSA.
Correct.
So UAE company's business, what is the business of the UAE company?
It's a consultation.
Consultation to whom? To KSA or
No, you know the regulation in KSA, you can use your company which is established in UAE for more than 5 years to start an investor, to start a business there as an investor, and you own it 100%. That company in KSA, if it's really operating as with its own employee, providing the service from KSA.
So KSA company will not be covered here in these regulations because these regulations are applicable only to the UAE companies.
Okay.
Yeah. So we have to look at purely the activities of the UAE company. That is what we need to see, not the activities of the group company or a subsidiary companies operating out of KSA or anywhere else in the world.
Thank you.
Hi, thank you. I want to know about the new companies that they don't have any sales purchase for the first year. Shall they apply for the ESR or not? Give some payments in bank, for example, the investors put some payments in the bank and for paying the colleagues for salaries. Is it necessary to apply for
No, I think with the nature of activities that you have described, basically there is no activity.
Yes, there is no activity.
So there is no requirement to even file a nil notification.
There is something like sale or purchase matter that we should.
There has to be some operation, whether by way of sale purchase, by way of rendering services, or even providing some finance to somebody.
I see.
Even if it's a passive thing for you, not a proper operating business. Even if passively you have lent money, that can also trigger it. But with no activities at all, there is no requirement.
Thank you.
Just confirming, so if someone is exempted from the ESR, they don't have to submit the notification, right? Okay, what if a company was under the understanding that they're not supposed to submit the notification and apply for the ESR, and then they figured out that actually the understanding was wrong? In that case, what will be the penalties?
See, for over-compliance, there is no penalty. The penalty is only for non-compliance. So, if you are submitted, I don't think the FDA will mind that.
Okay. There's another question. Is there any limit on the revenue? So, if a company is under a specific revenue number, then they're exempted, or it's not related?
So, there is no revenue-related thresholds in the regulations.
Okay, thank you.
Hi. We are actually an IT equipment seller, as well as we are doing software services. And the company is available in UAE as well as in India. But they are two different companies. There is no relation.
Yeah.
But the owner of UAE company is a partner in Indian company as well.
Sure.
We do purchases of this IT equipment from the Indian company.
Purchase of
IT
equipment.
Yes. So do we are we eligible for this?
You will be required because you are in the distribution business. Distribution requires purchases from a related party.
But it is not a parent company or group company. We both are different companies. The owner, what I said is like in India.
Owner same. So it's there is a requirement for consolidation of accounts.
Okay. Thank you.
Regarding corporate tax, you mentioned that all companies, whether they are free zone or not, and regardless of what the activity is, they have to be registered.
Registration is mandatory, whether in free zone or outside of free zone.
And regardless of what the activity is,
Regardless of the activities.
they have to be registered.
Yeah. Thank you so much for your time.